You know that feeling when someone you love asks for help? Maybe it's a family member, a best friend, or even a child. They come to you, looking a little desperate, and they say, "I just need you to co-sign." You're not giving them money, you're just lending your good name. It sounds innocent, right? Just a signature. Takes 2 seconds. Hi, I'm Finn. Welcome to the Real Cost Finance. I'm here to save you from the mistakes that banks pray you make. But let me tell you, and I mean really hear me on this seemingly small act of kindness is one of the fastest ways to absolutely obliterate your financial future. Today, we're going to break down the brutal, ugly truth about co-signing, why banks absolutely love it, and why it's a trap that has dragged millions, and I mean millions, of unsuspecting people into debt they never even spent, debt they never got to enjoy. We'll reveal the 3 hidden ways co-signing can ruin your credit, obliterate your savings, and even destroy relationships you thought were bulletproof. And trust me, the banks, they're not going to tell you this. Why would they? It's not in their interest. Okay, let's get one thing straight, right from the start. When you co-sign, you are not a backup plan. You are not a guarantee in case things go wrong. In the eyes of the law, and more importantly in the eyes of the bank, you are 100% responsible for that loan from day one. Day one. Not when things go south. Not if the other person stops paying. From the moment you sign that document, that debt is yours. The bank sees 2 borrowers, not one primary and one secondary, but 2 equally liable people. So if the primary borrower misses even one payment, the bank doesn't wait around. They don't send a courtesy reminder. They come directly to you. Let me give you a real-world example. Imagine your nephew wants a $30,000 car. He's got a job, seems responsible enough, but his credit isn't great. So he asks you to co-sign because, hey, you want to help the kid out. You remember being young and needing help, so you sign. 2 months later, he loses his job. Economy tanks, company downsizes, whatever. He misses a payment. That missed payment? It's not just on his credit report, it's immediately on yours too. Your phone starts ringing, collection calls, late payment notices. Your credit score, something you've probably worked years, maybe decades to build, can take an instant hit of 50, 70, sometimes even 100 points. All for a loan you didn't even use. You're not driving that car. You didn't benefit from that money, but you're paying the price. Think about that. And here's the worst part. Once your credit takes that hit, it can take years to rebuild. Years. We're not talking about a quick fix here. One act of kindness can haunt you for 5, 7, even 10 years depending on how bad things get. This is where it gets really ugly. And I mean really ugly. Most people think their credit score is just a number that pops up when you apply for stuff. But it's way more than that. It's a living, breathing financial entity that dictates whether you can buy a house, get a car loan, rent an apartment, sometimes even get a job. When you co-sign, that new loan instantly appears on your credit report as your debt. Even if, and this is important, even if the primary borrower is making every single payment on time, perfectly, never late, your debt-to-income ratio still goes up. So suddenly, the $40,000 car loan your friend took out, which you co-signed for, counts against your ability to qualify for your own mortgage. The bank sees you as having more debt, even if you're not the one making the payments, even if you've never missed a payment in your life. So when you go to apply for a loan, say for a down payment on your dream house, the house you've been saving for, the bank looks at your co-signed debt, and suddenly, you're not as attractive of a borrower anymore. Your debt-to-income ratio is too high. Your interest rates go up, or worse, you get denied entirely. I've seen this happen over and over. Someone co-signs for their kids' student loans, right? Noble cause. Education is important. Then 5 years later, they want to downsize, buy a retirement home, something manageable. And they can't qualify because they're already carrying $80,000 in student loan debt on paper. Debt that's not even theirs. And it gets worse, because now you're stuck. You can't remove yourself as a cosigner without the primary borrower refinancing the loan on their own. And if they could do that, they wouldn't have needed you in the first place, right? you're trapped. Beyond the financial nightmare, and trust me, it is a nightmare, co-signing is a relationship destroyer. It's almost guaranteed to create resentment and bitterness, no matter how good your intentions were. No matter how much you love this person. Think about it. If the primary borrower struggles to make payments, who do you think is going to call them first? You or the bank? It's going to be you, trying to protect your own credit and financial health. You have no choice. And suddenly, every family dinner, every holiday gathering, every birthday party becomes awkward. You're no longer just a loving relative or a good friend. You're also a debt collector. And that changes everything. The whole dynamic shifts. The person you tried to help now feels judged, resentful, and possibly embarrassed. Every time they see you, they're reminded of their financial struggle. And you? You're stressed, you're angry, and you're financially strapped. All because you said yes to what seemed like a simple request. I've heard stories of parents who co-signed for their adult children and ended up not speaking for years. Siblings who co-signed for each other and now can't be in the same room. Best friends since childhood who became strangers over a car loan. And here's the thing that really kills me. The person asking you to co-sign probably has good intentions too. They probably fully intend to make every payment. But life happens. Jobs get lost, medical emergencies occur, unexpected expenses pop up. And when that happens, you both lose. So, if someone you care about truly needs help and you are in a financial position to give it, here's the brutal truth. Give them the money as a gift. Don't lend it. Don't expect it back. Don't attach strings to it. If you can afford to lose that money entirely and it won't impact your own financial stability, your own retirement, your own emergency fund, then consider it a gift. Just give it. That way, you maintain your boundaries, you protect your credit, and most importantly, you preserve the relationship. There's no expectation building up, no debt hanging over their head, no resentment building up over time. If you can't afford to give them the money as a gift, then you absolutely cannot afford to co-sign. Period. End of story. It's that simple. Because co-signing means you might end up paying the full amount anyway, except now your credit is ruined too. Let me put it this way. If someone needs $10,000 and you can afford to gift them $10,000 without hurting yourself financially, great, do it. But if you can't afford to gift $10,000, then co-signing on a $10,000 loan is financial stupidity, because you might end up paying that $10,000 anyway, plus interest, plus late fees, plus the cost of your destroyed credit. The math doesn't lie. Co-signing gives you all the risk with none of the control. You're responsible for the debt, but you have zero say in how the money gets spent or how payments get made. It's the worst possible position to be in financially. Here's something banks will never tell you. They love co-signers. Absolutely love them. You know why? Because it doubles their chances of getting paid. If one person defaults, they've got another person on the hook immediately. Banks wouldn't ask for co-signers if they thought the primary borrower could handle the loan. They just love the single payment that. The very fact that they're requiring a co-signer means they've assessed the risk and decided this person probably can't pay it back on their own. So when you co-sign, you're essentially saying, I'll take on a risk that a bank, with all their data, all their algorithms, all their experience, thinks is too risky to take on their own. Does that sound like a smart move to you? And once you've co-signed, you have almost zero rights. You can't force the primary borrower to pay. You can't repossess the car or the house. You can't even access the account information sometimes. But you're 100% liable for the debt. All the responsibility, none of the control. Think of it like an airplane safety briefing. They always tell you to put on your own oxygen mask before helping others, right? Your financial health is your oxygen mask. If you compromise your own ability to breathe financially, you won't be able to help anyone, ever. Not your kids, not your grandkids, not yourself in retirement. You'll just both suffocate in debt together. And what good does that do anybody? Look, I get it. Saying no to someone you love is hard. It feels cold. It feels selfish. But protecting your financial future isn't selfish. It's necessary. It's responsible. And honestly, Enabling someone to take on debt they can't afford isn't actually helping them. It's just delaying the inevitable while putting you both at risk. Real help looks different. Real help is sitting down with them and figuring out why they can't qualify on their own. Real help is teaching them how to build their credit. Real help is giving them what you can afford to lose. No, not risking your entire financial future. So the next time someone asks you to co-sign, remember this brutal truth. It's not an act of kindness. It's an act of financial self-sabotage. Hit that subscribe button for more uncomfortable truths that will actually make you wealthy, not just feel-good advice that destroys your finances.